Assalamu alaikum. I'm Yasin Bonds, and this is the Muslims Connected podcast. A podcast for those looking for addiction and a little way of life moving forward. Today we are joined by Abdulazeez Davids, who is the head of research and a profile manager, portfolio manager at Camissa Asset Management. I must get the titles right for the uncle. So before we go into, I'll say, your full career, because you've lived, I'll say, a long and strong life in the asset management, I'll say, industry. Let's start from the beginning, where I learned recently that you and I are much closer than I expected as well. First, Assalamu alaikum, shukran for joining us.
Wa alaikum salam, shukran for the opportunity. Yes.
So, while you are a businessman in a nice suit, mashallah, and you're here in a fancy building, where did it start? Where did this man that we have in front of us, where did we begin?
Yeah, I think quite humble beginnings, closer to home than you might think. And I grew up in Belhar, Brasilia circle, next to Puta Fuad in the Amina barns.
My parents.
So I was there when you were born. And I think, late 70s. Look, I look very old with my grey hair and grey beard, but late 70s, so almost pushing 50 now. But yeah, I think, we grew up in an environment pre-1994, so it's still the apartheid era. We had disruptions growing up with schooling and all of that. But alhamdulillah, nothing that didn't break us. And there were tough times, there were good times as well. So, from those humble beginnings, my sister still lives there. So, alhamdulillah, we still rooted in the area. And I think quite pleasing to know that, Belhar is still on the map. There's still other people that have put Belhar on the map. And very proud of the roots and the heritage there as well.
Yes. So, I'll say, growing up from that environment, did you always know that, I'll say, finance was always a dream? And when do you develop the dream of going, this is the path I want to chase in life?
So there's a couple of things. Firstly, growing up, when you like 10, 12 years old, you really don't have a clue what is out there. And I was sort of a late bloomer in the sense that I was always a naughty one at school. So, got into trouble with the principal and all of that. It's only when I started getting to high school and much later in the high school career as well that I needed to pick up my shoelaces and really try and apply myself. But accounting, from a high school's subject point of view, accounting and the maths really, I really enjoyed that. And then you got the career guidance at school and they'll tell you, become a doctor, become a lawyer. There was this thing called an actuary, which was a fancy, I didn't know what an actuary was all about. But one of the star pupils at the high school, Belhar High School, where I went to, he always got, first position in the grade, and he became an actuary. I actually met him, and we've been communicating. But so I always thought, this actuary thing must be quite nice. But later on, as I got closer to matric, I thought, chartered accountancy is probably it's more broad. You're not working with insurance, so and that's really where we started. Sort of grade 10 in today's terms, standard 8 back in the day.
And then you also went to UCT, which is, I'll say, an institution that is, at the time, was like far out of our people's community. Yeah. So you were of the first to be in that space. How was that also as going as someone from like a small area to going to, I'll say, the bigger world now?
Yeah. So I started at UCT just before the 94 elections. So look, UCT has had a tradition of actually accommodating non-white students. And, there is a whole host of people that have gone through that, the mill of UCT back then already. But being on a campus during the 93 sort of upheavals and then the 1994 elections, that was very different. And, you could see the adjustment on campus. Because suddenly you've had more non-white people on campus. And, I remember that 94 election experience, April 1994, there was lots of debates on campus, what's going to happen? Is there going to be violence? All of those things. So So it was history in the making, and clearly, I mean, with students in particular, students tend to be more politically orientated, and they tend to be more aware as well of the politics of the day. So it was quite an exciting time to be on campus at that stage. Yes,
I think that also helps you now going forward, especially in the field you are now, to realize like change is something that you must be a part of, and you must be able to see it and set it at the same time now.
Yes, and I think, and I remember my late father, he was working at the councils, what they call the municipal council back then, and they were not allowed to strike, for example. And there was a period where they called, during apartheid era, called for a stay away. So all of them stayed at home for like 3 or 4 months. So there was no income. So it was tough time for us, because it was no work, no pay type of thing. And I remember 1994, my mother and him, they went to go and vote. And he said, we fought for this. And now it's here. We've got a duty to go and vote. And I think, the important lesson that I learned from that is that, to the extent that you can control your environment or yourself or your direction, you should. You've got an obligation to do that, because there was a period where you didn't have that. But there was a period where others were in control. Others dictated to you where you could go, what you could do, what you could see, what you could eat, all of those things. And I think that is a very different dynamic. And it's easy and I sound like an old man, but for today's youth.
Part the wisdom with us. Give us all the lessons that we're here for.
Part of the youth issues today is that a lot of what we struggled for, what we fought for, and what we sacrificed for, and our parents did as well, is now almost taken for granted. And that sense of, this is something valuable. I need to appreciate it. I need to work for it. I think a lot of that has gone out of society as well.
And so then moving from, I'll say from the activist space as a student, you then went into corporate, which is also another space where it might be a little I'll say condensed, or like a very small space again, where you need to stand out, but at the same time follow rules. How was that also moving forward?
Yeah, so I'll share an interesting anecdote. So I had a challenge at UCT in the sense that, look, we could never afford, my parents couldn't afford to send me to university. So my father always said, you can go to whatever university, but I'm not paying. There's no money to pay. So, you might as well try and get a bursary.
Yeah.
And we had to work hard, because we know that, there's limited spaces, first of all, but even more limited opportunities to get bursaries. And fortunately, I did fairly well in matric, so managed to get a bursary. But the irony is that it was a British government bursary. So
we must take the money. It's good.
We'll take the money where it comes from. But effectively, in my final year, so I graduated in 1995, did postgraduate studies in 96. And they said, hang on, there's no money. We're exiting the country because South Africa is now a democracy. You guys need to stand on your own feet. And so I spent more time in the financial aid office than actually in lectures. So it was a bit disruptive. So that's why I never completed the CA sort of stream, and instead went to go work as an accountant. So you talk about, the upheaval in the corporate environment. It was a huge adjustment for me, because suddenly I'm thrust into a role where I'm the accountant. And when most companies, especially the company that I started off, it's a smaller company, so de facto you're management. The accountant is management because he's paying salaries, he's paying wages. Everybody's looking to the accountant for direction.
Yes.
Now I'm this 22 and a half year old kid being the accountant in this company, and I need to take ownership. And some of the stuff they don't teach you at university is how to write out a check. And back in the day, we were still writing out checks. So it was a learning curve, but also it was an adjustment, because, the reality of that company was that you had a lot of, can I say white people working in management?
Yes.
So the sales manager was a white guy. All the sales reps were white guys. I was the only non-white guy in the company.
Wow.
Apart from the laborers that were obviously working in the warehouse and all of that. So, and now suddenly I was writing out their checks for salaries. I was the one that's paying wages.
The turntables there.
And I was in charge of the company vehicles. So it was an adjustment for them. Not so much for me, more for them, in the sense that they needed to recognize that I had oversight. And And that's also one of my first real experiences with conflict resolution in a way, because suddenly you come to Friday night, the sales managers used to taking the bucket home from work. And I'm not telling him, sorry, but the bucket need to stay in the warehouse, and creates friction. So, but alhamdulillah, we resolved it amicably. You could understand that, it is a company resource. I'm in charge of the register, so I need to account for the company resources.
So that's your first, I'll say, job as the asset manager.
As an accountant initially. So I started off as an accountant.
But I mean, in terms of managing the assets.
Managing assets, yes, definitely, yeah.
And then, so you move from the small company to a big company, which is I'll say an establishment in our country, but also just a strong brand of a company, Allan Gray.
Yes.
What was that adjustment that you got through?
So a very different experience. So in my first job, I was dealing with debtors and creditors and people looking for money, paying wages, doing all of the run-of-the-mill stuff that an accountant does. And it's actually, each role within an accounting sort of framework is very different in terms of pressure. You've got workers that are looking for their money on a Friday afternoon, or the salary guys looking at the end of the month for their salaries, and they're coming to you. Even worse is creditors phoning you, where's our money? DeFi used to phone me every day. We're looking for checks for fridges. So now changing from that into an environment where you don't have people phoning you for money, which it was quite refreshing. It was a nice experience. And just the story of me getting into Allan Gray was actually via the back door, in the sense that Allan Gray was looking for an accountant, but somebody with a bit of IT knowledge and experience to actually work with the IT guys to redesign their investment systems. Now, at this stage, I didn't know what the share was. I didn't know what the JSE was. We never grew up. My father never invested. We never had money to invest. Yeah. Now you're coming into this environment where they're talking about stocks and, commodities and the property market and all of that. And I'm just learning. I'm learning and absorbing. So now I'm 24 years old. So still under 25.
Still very young.
And the youngest person in the company. So you get to do everything, but you also learn from everybody. And I think I was in the unique position in that because I was responsible for this massive project, and it is a massive project, because effectively my job was to also not only modernize the Allan Gray systems, but to also populate the databases. So if you think of AI today and machine learning and big data, I was that guy. I was the AI of Allan Gray back in the day, in that I had to populate all those databases. Wow. So literally every weekend, because I was young, unmarried, most weekends I spent
just grinding,
just taking stuff from annual reports, physically copying stuff into a database and entering manual data.
And, from paper, like digitizing.
Digitizing. So if you had to so if you look at South Africa today, we've got a company like Anglo American. It's got a history going back to 1960. In the Allan Gray databases, all of the numbers that you see on Anglo American from 1960 till at least 2010, I would say, 2008, I put in that database. So the numbers are there. I put it physically in that database. So
alone, just
look there.
Going through
some of the numbers were there already, but we had to convert it to the new system. So I had to copy to the new system. But then there was a lot of missing information as well. So I had to physically, manually sit and type in numbers.
And then what did you learn in that time as a person, but also someone in the workplace? Because those are also places where you don't know what you've learned until you've just gone past that barrier, and then you go, these were the life lessons I was meant to learn doing something like that.
Yes. The first and most important lesson that you learn is time management and self-discipline. Because I go in on a Saturday morning, there's nobody there to supervise me. I could goof off, I could do whatever. Look, it's before social media, so there was no Facebook and Instagram and all of these things. There were no distractions, but it's easy to get distracted.
Yeah.
The other thing is that we had a time limit in terms of converting the databases. So I needed to finish this job as quickly as possible. There was nobody to micromanage me. So I needed to manage myself and manage my time. Later, as I progressed at Allan Gray, they asked me, do you want to be part of the investment team? And that's how I got into the investment side. But again, there it was quite it was a daunting challenge in the sense that I had my day job and they required me to upskill myself in terms of becoming a CFA charter holder as well. And that is the volume of work was intense. So again, time management is critical.
And then how was that, I'll say, the new career?
Yeah.
I'll say, because
It was
not
a different career.
It's because it's not accounting necessarily.
Yes,
It's now a step adjacent from those.
Yeah.
What was the I'll say the mind shifts that happened between those two careers?
On my side or on the company side? My mind was open. I was open to embracing this because, having been thrown into the deep end, normally as an accountant, you work with a senior accountant. I was thrown in the deep end in my first job. I had, you had to deal with people, you had to deal with. So coming from that environment now to a very specialist role, very structured role, where I had my line manager, I was reporting to him, I was basically doing the tasks that he assigned me to. It was actually a lot easier. So for me, it was an easy adjustment going from an accountant to being an investment person. But also, I think because I now suddenly have more time, because an accountant, it's a demanding job. There's a lot to do. You have one job, one task that you need to complete. So my productivity was very, very high, and they could see that. And I think that's what they appreciated as well.
So the training from I'll say the training of the deep end that you had now made your current job at the time easier as well.
Yes, that's right. And then I was in the unique position now that having set up these systems, I could tell and train everybody else on the system.
Nice.
So if you remember, I don't know if you remember, in 1999, there was a whole Y2K thing. So everybody was scared about going over from 1999 to 2000.
Yeah.
Are the computers going to crash and all of that? And I flagged it because I told the developers, look, in our databases, we actually just do 99. We don't use 1999, we use 99. So
it's just going to go to 0 then?
It's going to go to 1900.
Oh.
Because the first two digits is fixed, is 19. And we're dealing with time-sensitive data here because it's share prices. The MTN share price, there was no MTN share price in 1900. So suddenly we're going to go from, 31st of December 1999 to 1st of January 1900. And that is a challenge. So we spent probably 3 weekends in December going through that. And I sat with the developers. We had Allan Gray had a sister company, Orbis, in London. So I was chatting to those guys. We had to do what they call a manual patch. So we manually had to patch these databases and fool it into thinking that it's not 1900 but 2000.
Yeah,
because it's a massive task to change. We stuff are hard coded in either code or back then we used Visual Basic as a programming language and to manually go and change all the code. It's easy today in Excel. So you find 19 and replace it with 20. But back then it was a daunting task. So
but also you're dealing with not only the company, but money of a lot of people as well.
Yes,
and like the people's world essentially you're dealing with. It's a lot of stress.
It's a lot of stress. And especially, asset management in the sense that it's almost a sacred trust. People entrust their life savings to you. So it's beyond, in South African terms, you talk about a fiduciary duty. But fiduciary duty is actually, I think, doesn't do proper justice to your responsibility. It's at a higher level than just a fiduciary duty. It's a duty of care and trust. And I think that is very, very important because, people, especially when you work with individual investors and, they might have struggled to get where they are, or their life savings, and so it's important that you deal with it with care and skill, and you are very mindful in terms of how you manage it as well.
So then you at Allan Gray and you climbing the ranks. Did you study as well? Like you said, you studied. How many courses, I'll say, did you do while you were with Allan Gray?
So I had to do the CFA course. So it's a 3-year. Like a master's equivalent, and you get a charter, so the Chartered Financial Analyst designation. It is quite intense. There's a lot of reading, a lot of studying that you do. Back then, there was only one exam every year in June that you had to write. So I wrote 99, 2000, and then 2001. So managed to pass all 3 levels in the first attempt. And yeah,
I'm always intrigued with people who have like full-time jobs who still like choose to study because you have to sacrifice so much of your the rest of your life
yes
for those moments.
Yes.
And then So you grow through Allan Gray, and then we come to
Kamissa
now. I'm going through the steps of your life,
No. Before we get there, I think it's important. So as I was doing analysis and investments, I sort of discovered the Sharia investing market, in the sense that there were some other players in this market already, but it was growing, especially in places like Malaysia. So I was doing a lot of reading on my own, trying to learn about this market, the Sharia market. And then at that stage, the person, Allan Gray, was still alive. And I worked very closely with him. Every year he would come to Cape Town. I would prepare his pack because I was the guy that set up the systems, and he trusted me with the systems. So I prepared his pack. And the one year, I distinctly remember, 2001, I went to him and I said, Mr. Gray, Allan Gray is doing well. Don't you think we should look into starting a Sharia fund, an Allan Gray Islamic fund? And to his credit, he didn't say no. He said, go and do some work, look at the market. So I did some research. I presented the paper to him, and I told him, look, we can probably get to like a 2 billion rand fund. And then he said, look, that's probably too small. We want to grow to 10 to 20 billion. And today, their funds are much bigger than that.
What year is this?
It's 2002, late 2001, 2002.
And a billion is a lot now. A billion
back then was even more. So it just shows a vision that he had. He wanted to build a big business. But and so I spent some time in Egypt. I went to Egypt, looked at the Egyptian market. He wanted to maybe set up an Allan Gray office in the Middle East, and we said, look, Egypt is probably the best place. Spent about a week in Egypt. But then the problem with Egypt at that stage, it was much more underdeveloped compared to South Africa. It's a much smaller market. And in South Africa, we've got the large life insurance companies like an Old Mutual or a Sanlam. Egypt had similar. They had a company called EFG, which is the Egyptian Financial Group. And they just merged with a company called Hermes. So they basically owned all the shares in Egypt. So if you're going to come in as a new player, you have to buy from them.
Oh.
And guess what? They're going to always do better than you because they're making a profit at your expense. So we sort of ditched that, and instead they gave me the non-South African businesses to run. So I was running the Botswana business, Namibia business. They had a Swazi client as well. So all the non-South African operations, I was sort of portfolio managing those businesses.
And were you traveling a lot then at the time?
Every quarter, flying to Windhoek, we had to fly to Gaborone, Botswana, all of those places. Yeah,
filling the passport up over there.
Yeah.
And then what did you realize as a South African going to those places in terms of the type of people they are and the type of people we are? What did you, learn from those experiences?
Look, I think people are very different in the customs and cultures, but all the same in terms of what drives them. Most people are driven by either desire to make money, which is, in asset management, that is a critical thing for a lot of asset managers, or a desire to better themselves, become more educated, or just raise their standard of living. And part of my role was to actually work myself out of a job because we needed to find Namibians to run the Namibian office, Botswanan people to run the Botswana office. So part of it was doing recruitment as well. So and you learn a lot about people just by interviewing them and just getting to know them. And I think one of the key things that I learned is that there is this concept that non-white people are lazy, or they don't work as hard, or they're not as ambitious. And, if you go to Africa, Botswana, people work very, very hard and they're very ambitious. The same with the Swazi people. They it's a kingdom. They've got royalty there and they feel like, like royalty in a way. And Namibians are also very hardworking as well. So it's a key learnings for me in my travels into, not that far into Africa, but
to the neighbors.
Across the borders, yes.
Is that your thing? Is just with the neighbors all the time?
Neighbors.
And so then from there you move on to Kamissa.
So Kamissa headhunted me. They wanted somebody to add depth to the investment process. And, Allan Gray was always seen to be this deep value, bottom-up stock picking business. And basically what that means is that Allan Gray would always not rely on other people for their numbers. They would create their own numbers in terms of doing the research, determining what is the fair value for investments. And And at that stage, it was still called Camissa Asset Management. The name change only happened about 2.5 years ago. But back then, what we found was that Kamissa was a much smaller business. And it took some convincing to my wife to say, like, you're leaving this big, established Allan Gray. So in my tenure at Allan Gray, in 1998, when I joined Allan Gray, it was an 8 billion company. We had 36 people in the whole company. We used to have a board table in the kitchen where we all sat. Mr. Allan Gray, when he used to come, he would sit with us. We would eat at the table. That's how small the company was. By the time I left, they had 350 people, and the assets grew to about 300 billion in 10 years. So now to go from that 300 billion company to come to, again, a small company with 15 people, 7 billion of assets, not 300 billion, 7 billion, took some convincing for my wife. I took a massive pay cut.
But it is a lot of convincing then. I feel like the pay cut is where you must have the vision.
My key condition to joining, because remember I did this pitch to Allan Gray and I told him, why don't we start the Allan Gray Sharia business or Islamic fund? So I told to the Kamissa guys that, look, I'm happy to take a massive pay cut. I'm happy to, do a lot more work because I don't have a PA and I don't have somebody that brings my tea and all of those things. On the condition we start a Sharia business. So that was my major condition. And to their credit, they accepted that. And I immediately started to get to work. So I joined, that's also another story. So I was supposed to start officially on the 2nd of February, 1999. But then they were busy with big tenders. So I actually worked through December for Kamissa back then, working on these tenders.
Before you started?
Before I started, for no pay. And spoiling my December holidays as well. So,
but your wife is an angel and she believes in you as much as you believe in business.
Yeah. But luckily, that tender that we were working on, we got the mandate. So the client gave us the funds in April 1999. So that was a good outcome. But the key thing for me was that I honestly believe that, starting back at Kamissa, now Kamissa, the Islamic business and the Sharia business, we can offer a very differentiated product. At that stage, there were 3 established players in the market. I felt that the market could accommodate, at least a 4th player, which we were. But more importantly, it was bringing something very different to the market in the sense that when Allan Gray started their first unit trust, all the analysts, and I was part of the team, we had to go, to almost knocking on people's doors. Don't you want to come and invest with us? So that was a great learning experience for me in terms of the retail side of asset management. But more importantly, looking at the way Allan Gray does things in terms of transparency, telling people this is where your money is going. This is how we invest, which was very different to what was the norm. So the norm was that just trust us. We know what to do with your money. Give us your money, we'll invest it. Don't ask questions. We'll just take your money and then every year we'll give you your performance. And I think it's a much more powerful proposition if you tell people this is where your money goes. And if we don't do as well, we'll tell you why we're not doing well and be accountable. It's part of that highest sacred trust that I talked about. So I always felt that was something that has a huge potential in the Sharia business. And literally, we had to scramble to get the 1 million rand together to start the first fund. But April 2009, we launched our first fund. It was called then the Kamissa Islamic Equity Fund. We've renamed it now the Kamissa Islamic Equity Fund. And that fund now has a 15-year track record from 2009 now to 2024.
And you were there since before the beginning of the fund or so?
Yes. And it's now 2 billion rand fund. So from 1 billion rand seed capital.
Wow, that's amazing.
Yeah.
And then what of your upbringing because we come from Belhar. It's a close-knit community. Yeah. What of those traits that you've learned from from our people that you have brought to the way you run your business now, or not your business, but you practice in the business now?
I think there's a couple of things. First of all, it's not great for me to say. Other people say it. I don't know if it's true, but they say that humility. We come from humble beginnings, and it's important never to lose your humility. And it's easy, people can get very wealthy in this industry. Some people make millions and flashy cars, nice suits. Not that this is a nice suit, but and all of that. And it can go to people's heads, but to stay grounded. And I think that's my key. And that's why it's, I mean, as I mentioned, my sister still lives here, and, you know, going back there, going to the local masjid, you know, that's important because that keeps you grounded. And that's a key learning for me. You know, my late father was the treasurer of the masjid until the day he passed away. And he was there from 1986 when the masjid opened. So, you know, that humility, but also that motivation to pitch up and to deliver. You don't need somebody to look over your shoulders and to remind you of why it's important for you to pitch up. And I think those are the key things that I've learned from Belhar and from my father. And, you know, it's important that we stick with that. And it's a key takeaway as well. Those are qualities that are sort of diminishing in our society today. People, you know, if you look at millennials, fresh out of varsity, within a year, they've had 3 different jobs. They don't have staying power. And they don't have, I'll show you one anecdote just on this point. So that first company that I worked for, the MD, you know, he's an ex-Telkom employee. With 1994, they had to let go of a lot of the senior white guys to make way for the non-white people. And he always felt disgruntled about it. But he took his money, started this business, not knowing, being a telecom technician, not being an accountant, and not knowing much about business. And obviously, it wasn't a great sort of start of the business. But, you know, back then, you know, people were still using derogatory names, and it was commonplace in the workplace for me to be called the N-word or whatever. So
can't even get too angry because you go, this is normal.
It's like normal language. Yeah. And I used to complain to my father, and he's like, you know, these people are calling me these things and just not thinking much about it. And he was always saying, you know, for 40 years I've worked at the council, and they used to call me that every day. Why are you complaining? You know, so that type of thing where, you know, it's a harsh environment, but adapt to it. Not that we should tolerate it. I think it's critical. We shouldn't have to tolerate it. But, you know, it's important to also not be too sensitive, I suppose. And obviously to the point where you need to stand up for yourself, it's important to do that as well.
I think also I'll say at asset management, you very much playing the long game.
Yes.
So you have to, I'll say, spot potential and then ride until it pays off.
Yeah.
And that's essentially what you also in the job you have to do. If you really love the job, stay with it, push for it. Yeah. You'll find the reward of those moments. Yeah. So now, say we can wrap up soon. Going forward, what advice would you give to younger you? To you at UCT that was sitting there, I'll say deep in the books, what advice would you give?
Don't go to the student union. Spend time with your books. I think today it's very difficult for students and anybody, you know, studying, because we've got so much distractions. I was in the fortune, I only got a cell phone, you know, in my last year at my first job. I had to buy cell phones for everybody. I didn't believe in a cell phone because I felt, you know, I've got a phone at home, I've got a phone at my desk. I didn't need a cell phone. So I was probably one of the last people in the office to get a cell phone. But clearly the advances in cell phone technology means that there's so much more you can do. My biggest advice is let that be an aid to you in your learning, and don't get distracted by it. It's easy to get distracted. And sometimes, you know, in our work environment, we try and create a culture, what we call deep work, so that you have, and there's a book called Deep Work that has been written as well. And the idea that, you know, if you can immerse yourself for 2 to 3 hours a day in quality with no distractions, deep work, you're better than 80% of the population. And your outcomes will be superior to everybody else. And especially today, what we find is that the benchmark has actually been lowered because of all the distractions and AI now. People can just search for stuff and you'll get the information. But it's almost like a dumbing down of society. So the way to get ahead is to not be distracted and try and, you know, immerse yourself in deep work and immerse yourself in deep thought. And a critical skill today is 2 things: the ability to think and the ability to be succinct in expressing your thoughts. And, you know, coming back to our religion, the Prophet Muhammad Sallallahu Alaihi Wasallam, he was an excellent example in both of those. Somebody would ask him a question, he wouldn't just give an answer. He would think about it, either through revelation or, through his own sort of intuition, he would give an answer. But it's not something blurted out. But his answers were always concise, to the point, and almost, full in terms of their meaning. And that's a skill. Because today, there's a lot of words going around, but not a lot of sense, in those words. And I think that's a skill that we can be learned from as well.
You say this now, and I want to go home and go work. I want to go, let me just give 3 hours for the day and do the job that is needed. Shukran for joining us today. I've learned a lot. We covered the words of advice, because I feel like I'm taking that advice too hard. I know you're also a very busy man, so again, shukran for your time and the wise words. Many times I do interviews, and a lot of the times the people I interview also have things to say. What else would you like to tell us?
So I think what is important is, if you look at the Sharia market today, and in particular, where I think, my responsibility as an asset manager, and as especially a Sharia asset manager, is that what I've discovered is that there's a lot of Muslim people that have vast amounts of money that they have invested, but they don't have a clue how that money is invested. And, our responsibility is not just to pray and fast in Ramadan. Our responsibility extends to our money as well. And we've done an exercise, and I just want to throw some numbers. Being an accountant, I need to throw some
always
numbers.
Give me the numbers.
We did an exercise where we looked at the entire savings pool in South Africa. If you look at what we call pension funds, and I'm sure you'll do a podcast on the two-pot system, which has been implemented this month.
We're going to come back for that. You're going to teach us. You're going to be our money guy that's going to teach us all about the numbers that's not in my pocket.
Yes. But effectively, if you look at the pension fund industry in South Africa, it's a 4 trillion rand industry. Wow. So that's 4 with, I think, 12 notes behind it, effectively. So 4 trillion, 4,000 billion, if you think about it in that terms. We estimate that the Sharia market component of that, so Muslim-owned wealth, is about 400 billion of that. It's about, 1%. 400 billion is a lot of money. If you look at the actual money invested today, it's only 20 billion.
Oh, wow.
So this market today should be 400. It's sitting at 20. It can grow 20-fold today. The challenge is 2 things. Firstly, there's a lack of awareness. So a lot of people, like I said, that have been working for 20, 30 years, they're sitting with a huge pot of money, but it's all invested in non-Sharia products. It's invested in, liquor, gambling, all of those other things. That's point number 1. Point number 2 is actually there is a subset of people that are aware, but they think that, it's either not important, or I'm going to lose money if I'm going to invest in a Islamic or Sharia fund. And, alhamdulillah, we've demonstrated that you're not sacrificing anything. Over 15 years, we've outperformed many what we call conventional funds. But more importantly, I think you don't want to have a situation where you come to 60 or 65, you now get 5 million rand as a payout. In your entire working career, you probably earned, if you accumulate all the salaries you earned, is less than $1 million. Now suddenly you get 5 million, but 80% of that was invested in non-compliant stuff. And now you need to either give it away or deal with the fact that you're going to consume non-permissible, non-halal sort of savings. And my duty, I see it as my duty as somebody that, is aware of this and has some insights into it. I need to tell you about it. I need to tell our audience about it.
Yes.
Because ultimately it's their decision. But then I've absolved myself of my responsibility of informing them that actually you need to make sure that your retirement savings are invested in a halal way. Beyond that, there's a whole host of asset managers that you can invest with. I'm not saying come to Kamissa and invest with us. It would be nice, but there are other options as well. But the key message is, and that's why I appreciate this platform that you've given me, is to spread that message that, make sure that your investments are invested in a Sharia-compliant manner. Because you don't want to come in your old age. And that's why I know the audience of this podcast is probably majority millennials, people starting out working. If you can do it right from the beginning, from the get-go, you're in a much better wicket than somebody that's been working for 30 years that now need to rectify their affairs. And I think that's probably the key message that I want to leave with.
So let's say I have I'll say a small pot of money, or even like I earn a paycheck. How do I get into? Because again, many times I earn a paycheck, I pay what needs to be paid, I save a small sticky, but I save it just within our own bank. You say asset management, it sounds like it's big building stuff. It's not. It's out of our world. What's the best way to get into the thing? Must I come with a stick, or is it just a debit order, or a sticky? What's the requirements?
So the key thing is, and also the great thing about unit trust. So we invest in unit trust, is that it actually allows for disciplined savings. So the best way is always, and I tell my kids also, is that when you get something, put away, first prioritize your savings. Put away 500 Rand or 200 Rand. And that's actually the best way that you can do it, is to actually sign a debit order. Then you almost forget about it. When the salary comes in, the debit order is taken off immediately. And you don't have that money to spend. It's not there anymore. That's by far the best way for most people. Then you can always top it up with additional top-up savings. But actually, in life, they say there are two certainties, death and taxes. And if you can avoid taxes, you can't avoid death, then, there are tax-free options, there are tax-saving options for you, which get the tax man to work for you and contribute to your savings. So there are all of those, and it's for everybody. My mother-in-law's invested, my kids are invested. They don't know, they don't even have jobs, but they've got investments. So it's really for anybody. And it's from as little as 500 Rand. Most asset managers take from 500 Rand as a debit order, or 5,000 Rand as a lump sum as well.
Because again, I have a saving just for those rainy day savings. And again, money isn't discussed properly, I think, in our community. Where we go, your money, don't speak about this stuff. You don't necessarily need to flaunt it, but to educate is very important, especially with something that is a valuable something so valuable. And then we also see many times when people retire that they get the money and they don't know what to do with it, or they blow the money and those things. So, what advice for money-wise? What other advice can you?
The best advice I can give people is get financial advice.
Yes.
Unfortunately, I can't give financial advice, but the best thing for people to always do is to speak to a financial advisor. And people have this concept that the financial advisor is going to take so much money off me. There are great financial advisors out there that sometimes will actually give you financial advice for free. And I think that is quite important. Your finances is a critical part of what you are and who you are. And to remember, when you are retired, that savings need to sustain you until the day you go into your cupboard. So it's important to plan for it. And financial advisors are there to help you plan for it as well.
So plan for the rainy day, but you must also enjoy your money at the same time.
Yeah.
That's another thing. I feel like a lot of people, they also like live for later, but they don't always enjoy now again.
Yes.
And then there's the other opposite again, where people blow their money now and they don't think of the savings that must come.
I'll share one anecdote with you. So my father worked for, he started at 18 and he retired when he was 61. Took early retirement because that just came in. And I told him to retire because they changed the pension fund. So if he had to stay longer, his benefits would have dropped in terms of what he would have gotten. So that's a long period of time. And alhamdulillah, he had a few debts which he could cover, but his dream was always to have a Mercedes. So you could,
classic uncle.
The big Mercedes, the old one. That's a fair. It was a second-hand Mercedes that he bought. And I mean, he could go for Hajj as well. So, but then the rest of the money he invested. And alhamdulillah, he had a long, fulfilling life long after he retired. So, but we had a El Camino bakkie. We grew up with the bakkie. Now suddenly my father could finally get his second-hand Merc as well. So you're right. You need to spend a bit, spoil yourself a bit, but then also save for that rainy day as well.
And also, I wish every uncle gets his Mercedes.
Yes.
Whatever the car must be, but we all go, you work your whole life. I also hope that you work. So if you're smart with your money now already, you'll be able to get your Mercedes at the end. Inshallah. And then for your kids, have you started, because as someone who works now with money, when do you start for your kids? Like when did you start saving? When they just started, or?
Yeah. So that's by far the best. So yeah, when For the one, I actually started when my wife told me she's expecting hamil, and but the way I do it is just a debit order. So I've got 3 debit orders, 3 keys, 3 debit orders. You forget about it, and it's not big amounts. It's like 200 rand each, so it's not big numbers. But alhamdulillah, the eldest is now in his 20s already, so that's 20 years of savings.
Oh, that's
so alhamdulillah.
And no, again, for myself, I'll say I've only started saving recently. Don't judge me, Kanala, for the listeners. But again, that thing of there's many things I want to do and want to, so I need to learn. I'm going to say, I'm going to call you after this, and we're going to speak about my money. But it's also, you don't see it as money, it's investments, it's assets.
Money is actually worthless. Money doesn't have any meaning. If I put a stack of money here, it actually doesn't have any,
it's just
and in economic terms, they talk about utility. It only becomes valuable if you do something with it. And that's why Islam teaches us also not to hoard money and not to just keep it under the mattress, work with it. And the best way to work with it is to invest it in something. Invest it in a business, invest it in an sort of enterprise, invest it in a unit trust where you actually get a cumulative working experience with that money in terms of the underlying investments as well.
So again, shukran so much for your time. I've learned a lot. I need to go speak to my bank, and I'm going to come speak to you later. Sure. Shukran for joining us today. I hope that our listeners have learned as much as I have. I hope to see you soon in Belhar also. Inshallah. I'll see you on Lebaran.
Inshallah. That's so far away. Maybe Christmas.
Okay, yeah. Belhar also have Christmas and Eid together.
The whole Brasilia circle. There's quite a few people that celebrate Christmas. So
it's a great community. Shukran again for joining us. I am Yasin Barnes. We are with Abdulazeez Davids, and this is the Muslims Connected podcast. Shukran.